Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Tuesday morning, you're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. The markets are flying and they're raging and they're doing all kinds of things in a very, very fast-paced manner. Will the gains continue at this pace is the question now, which I think is logical to ask. So now, I think 6 days in a row the market's been up. It's got to be, the longest streak of win, at least in 7 months, if not longer now. I'm Prashant. With me, my colleagues Nigel and Surbhi. Guys, hi, good morning.
Hi, good morning. Morning, Nigel. Morning, Prashant. I guess no one's going to be questioning it or complaining because we got slammed so hard that this momentum on the way up just has been feeling, I think, very good across the street. But let's not forget, there is a gentleman called Donald Trump out there. Always makes life very interesting.
Well, give and take everything. You know, in January and February, everyone was pointing out that India was underperforming. Guess what? In March, we're outperforming. And that's a point to be noted as well, because after the stark underperformance, there are signs that we have been outperforming. Let's see how long it lasts. But good times for the markets, particularly the broader markets.
The broader markets. And I think last night, US also has rallied hard.
Yes.
So that is another point to note. Let's just sort of start there, right? So 1.7 higher on the S&P, then Nasdaq was up about 2.27%. I mean, the story which really moved markets in a big way, which was the underlying driver, was, of course, the weekend story, which we put out here the morning yesterday, which is the fact that the WSJ and the Bloomberg stories, which said that tariffs could be more targeted and less drastic. And that is, I think, ultimately what really was the tailwind for the market. Trump, of course, President Trump reiterated last night that I may give lots of countries breaks on tariffs. I mean, and then, of course, he threatened 25% secondary tariffs on nations buying Venezuelan oil and gas. It's just chaos, absolute chaos, a huge amount of uncertainty, lots of questions without even going into, the second order questions. I mean, even at the first glance, we don't know whether what will eventually happen. So, enormous amount of uncertainty. But the fact is that markets will stop reacting in a very sort of dramatic way if you have this news flow day after day after day. The only good thing is that we don't have to wait very long. 2nd of April is here. It's just around the corner. I mean, I think, next Wednesday is when we will find out what actually comes through. While there is a lot of uncertainty, I think the markets are getting a little tired maybe at the margin with all of the confusion, reprieve, go all in, etc., etc. So we'll find out. In any case, the S&P 500, by the way, in terms of that Venezuelan story, I'll just put that the graphic will come up again. Reuters says that according to Venezuela data from Venezuelan government, India has now become the 3rd largest buyer of Venezuelan oil and gas, oil basically. Again, we're reaching out to the ministry. We're talking to oil marketing companies here, and we'll try and understand what this really means. Now, the S&P 500, just to go back to prices, has closed above its 200-day moving average yesterday. So that's a sort of a Lakshman Rekha in that sense. The CBOE VIX cooled off almost 10%, back to 17 point something. The 10-year jumped, though, 9 basis points. And, we were back at about 4.34. Dollar index was up. It's been creeping higher. I think about 4 days in a row now. We're about 104.31. Slowly and steadily, it's coming back up. As we are getting closer and closer to the 2nd of April. I mean, tariffs are dollar positive. I mean, they are supposed to be dollar positive. They've not been dollar positive. Dollar's gone the other way. But so will some of that start to reverse? Technically as well, maybe there are some indications that perhaps there is a bit of a bounce coming. Oil prices were higher. 73 plus is where Brent oil prices left off at. So which gets us to levels and prices here where we've left off. So 23,600 is a number that we put out last week, Thursday, that the market should head to. Yesterday, we got to 23,600. In 2 days, I didn't think we'll get to it so fast. And we've closed above it. What is the 23,600 level? It's a 38% retracement of the entire fall from the all-time high of 26,277 to the low of 21,964. Even after this massive move, there is no signs of tiring or any reversal signals. And by the way, readings, especially on the technical side, at the margin are screaming overbought now with the kind of move that we've had. The next level is the February high on the Nifty, which is 23,807. That is the next number where perhaps there will be a little bit of supply which comes in. Support comes in at the hourly averages, which keep getting pulled higher as the market keeps running up. So 23,387 is the 20 hourly, and then 23,157 is the 40 hourly exponential moving average. But I mean, watch the 20, which is closer to 23,400, about 250, still 250 points away from where we left off. The Nifty Bank, I mean, I think, it's close to rallying 5,000 odd points from the lows. And again, it's done phenomenally well. I mean, here, the 61.8% retracement of the entire fall comes into view, which is 51,883. We left off at 51,704. And once the 51,883 number goes, then we're looking at potentially, the market opening up to the idea of a new all-time high. Support, like for the Nifty, comes in at the 20 hourly and the 40 hourly. 50,715 is the first support, and then 50,172 is the next support, which comes in for the Bank Nifty. Gift Nifty will come up on your screen, gives you a quick sense of how we are likely to start. 70-point gap up once again. And of course, as the market has shown last few days, it's kind of been, now you get into a bit of a tricky kind of a zone. Because it's been a clean run so far, and now you got some. We don't know if the 2nd of April is going to be a clearing event or it's going to be a risk event, right? So in that sense, as you get closer and closer into it, and with these gains in the bag, I think it perhaps gets a bit more choppy and not one way like we've had from the rally that we've had from the lows. Surabhi.
Yeah, absolutely, and which is why Asian markets are not exactly as bright a shade of green as Wall Street, because many of these markets, including us, we're on the receiving side of a lot of this chatter, plus, of course, the reality that's coming through. For instance, the Japanese market is holding up quite okay, but look at the Hong Kong market, look at China. Hong Kong's selling off big time right now. It's down 1.6%. I'll get to more of it in just a bit. Before we talk about tariffs and the implications of whatever Trump has said now on Venezuelan oil, Bank of Japan, one of the reasons why the Japanese market is not faltering is that the BOJ minutes are indicating that, yes, there are more rate hikes coming. The members have been fairly concerned about two things primarily. One, that the real rates in Japan are still negative. So that's the point of concern, which is why some of the members are arguing for the need to hike rates again. And second, the concern is on inflation. So this is indicating that this was just a pause that the BOJ was on. They will continue hiking rates. So that's something that's kind of playing out over there. Talking about the whole Venezuela issue, while Prashant, of course, mentioned India, and we are obviously the third largest sort of importer of Venezuelan oil, let's look at some of the other markets as well. China actually is the largest importer of Venezuelan crude, followed by the US. We come in at number 3, and then there is Spain. So these are 4 large economies that are importing a lot of this Venezuelan oil. And if there's, straight 25% blanket tariff, then obviously it becomes a little tricky. So continues muddling the water. So that's what we've got going. So international picture not as clean as yesterday. Let's see how we navigate it as we go forward. A couple of important local developments as well worth taking note of. One, very good news on the FPI front. We've got these flows coming in on a daily basis. Yesterday, what the market regulator has done, this is at the end of the SEBI board meeting, is that it has removed the uncertainty, the overhang that started way back in August 2023. That is when the market regulator had issued its infamous August 23 circular saying that all FPIs which have more than 25,000 crores in terms of total AUM in India, they must make granular disclosure right up to the last beneficial owner, complete see-through in the whole structures. This had unnerved a lot of people. There was a lot of back and forth, and then there was some talk about certain FPIs being exempt. Now the limit itself has been hiked to 50,000, and SEBI reiterated or explained why they've done it, because the market valuation has gone up several times. So they felt that it's the right thing to enhance that limit to 50,000 crores. So it's a blanket sort of, end of uncertainty on a whole range of FPIs. However, the concentration criteria has not been changed, which basically means that if your total AUM is more than 50% is in only one group entity, one Indian listed conglomerate, then you have to make additional disclosures. So overall, it's very good news on the FPI regulatory front. And the numbers kept coming in. Let's move to the fund flow picture. Yesterday, we got another 3,000 crores. Nigel, I completely take your point. The previous day, that 7,000 crores had the index rebalancing. Yesterday, again, we had 3,000 crores coming through. You can argue some of it is coming through a lot of the secondary market action that's picked up, blocks, QIPs, etc. But anyway, it's money that's coming in. Domestic institutions were also on the buy side, about 100 crores. Some news on banks. We'll tell you more details in just a bit. But again, it's good news, largely speaking. RBI has revised the priority sector lending criteria. Essentially, the two big headlines are that it becomes easier for housing sectors to sort of get more loans because the definitions or the limits have been enhanced for housing loans, and also for renewable energy, the definitions have been broadened. So it gets easier for RE entities to perhaps get more loans under the PSL tax. So that's good news coming in. And finally, lots of QIPs, like I was saying, lots of action. And these are the additional companies that are out there in the market to raise capital. We'll tell you more about them individually. But overall, looking good. Good news from RBI, good news from SEBI, and global picture not too bad.
Well, and what was encouraging yesterday is we had a big breakout yesterday, and the rally was led by institutional buying, not by short covering. So that was the big point in yesterday's trading session. After a while, no one-offs, no rebalances, what we saw. We had genuine buying coming in from institutions in the cash market, and that is heartening to see. What about the FIs do, though, on index futures? Well, they added some mild long positions, short positions as well, more longs than shorts in the ratio of close to around 8:1, which is encouraging, though they continue to remain net short with close to around 68% of their positions on the short side. On stock futures, though, there was a bit of a short covering bounce that did play out because the shorts were covered out by close to 9,000 contracts. Longs were added by around 5,000 contracts. A swing factor there of close to around 13,000 contracts. Remember, they have been net long on stock futures itself, but in yesterday's trading session, individual stocks did see a bit of a short covering bounce. The options data comes up for you on the screen, and now those call writers, they are running for cover. You know, the 23,500 call, 23,600 call. Big unwinding is what we saw there. They are packing their bags. They're saying, let's take what we're getting and let's get out of this market, because it seems now the momentum is with the bulls. And at the 23,500 put, we saw aggressive writing in yesterday's trading session, which gives us a couple of those reference points. On the downside, this becomes important support level because at the 23,500 put, there was writing. You also have the 100 DMA that's in this vicinity, so that becomes important on the downside. On the upside, the 200 DMA, that's going to be very, very important. 24,000 mark. This is the line in the sand. The bears will try to protect this level. Very, very important out there. The Nifty bank, that's the one that's broken out. It's conquered all technical levels, the 20, the 50, the 100, as well as the 200. In terms of a reference point, now the 200 DMA becomes a bit of a support zone. The 100 and the 200 DMA, which it broke out in yesterday's trading session, conquered the 200 DMA as well. So things looking good. Reliance Industries is holding one end up. The Nifty bank is breaking out. The important point is, will tech join the party? Fundamentally, we had a couple of brokerage notes that came out yesterday that said, maybe it's time for tech to now join the party. And if you look at it, you know, year to date, the tech index actually has been a rank underperformer. It's down close to around 14%, while now the Nifty is giving you positive returns for the year. And if you look at it on the technical aspect, you know, fundamentally, many brokerages believe things are looking good. But on the technical aspect, now the tech index is very, very close to its 20 DMA. So I think, you know, the tech index needs to participate if the markets need to move higher from here on. Stocks that I'm looking at, a couple of stocks because of a technical reason, they come out of the F&O band, Hindustan Copper as well as Polycab. We'll keep an eye out on both these two. Maybe post the recent run, taking some money off the table if you're a trader may not be such a bad idea. Let's see how this goes.
Okay, all right, got that. So maybe a little bit of a pause today, maybe some profit taking. Just take your breath to continue. Let's see if that's kind of a day. Well, let's start with the equity call of the morning. Venugopal Gare of Bernstein says that earlier this year, they had turned positive on the headline equity index as against a cautious view in the second half of last year. He says bottoming of domestic macros is central to that thesis. And as it is playing out, it is driving some recovery in equity indices. He says the next step is about navigating the global challenges, among which the risk of a US recession has emerged. He says their analysis suggests that India being a beneficiary of such an event. He adds, with domestic flows still resilient and FII outflows now largely done, they reiterate their positive view on the Nifty index with a year-end target of 26,500.